Welcome to Inspiring Entrepreneurs, a radio show and podcast where we deliver wisdom and valuable advice directly from Canadian business leaders. My name is Dan Delmar of TNKR Media.
And my name is Michael Newton from BDO.
Today's show is presented by BDO Canada. For more thought leadership and expert advice from the BDO team, visit bdo.ca. Mike, it is our last show of the year on the radio, but you can subscribe to the show on your favorite podcast platform to hear longer, more in-depth episodes and a lot of web-only episodes coming over the holidays and into January. So just search Inspiring Entrepreneurs Canada. Our Holiday Movers and Shakers episode features Dax De Silva of the Montreal-based Lightspeed, and the latest, of course, on the Trump tariff standoff, which we'll get to in a second. Today on the show, we have Brett Huneycutt from Wealthsimple, a Montreal connection there to this really, really fast-rising financial institution. We'll talk a bit about them, along with some other news and notes in a moment. And Mike, we want to use the occasion to make a pandemic pivot of our own.
Yeah, Dan, we're going to go deeper into the podcast space. When we started this 16 years ago, it was kind of novel for the time and what we were doing. But as the show has changed along the way, I think we continue to have to be fresh, not only in the content, but in the delivery. So this is really a great opportunity for us to continue somewhat on the radio, but really shift heavily towards the podcast environment, which is going to allow us to be, I think, a little more, maybe controversial is not really the right word, but a little more debate between you and I on a lot of things, which I think is going to be a benefit to everybody. And I mean, let's be honest, we're different generations and we both have an opinion. So you take the different generations and multiple opinions, and I think it should be good for all of us. In the worst case scenario, Dan, you and I will have a lot of fun.
Indeed. It'll be a little bit more, not necessarily controversial, but cutting edge, more current. And we're going to try to update people, especially on, the tariff showdown and what Canadian entrepreneurs are going to be facing in the coming weeks. And we want to be there for entrepreneurs in Canada. And just as we were in the early days of the pandemic, going back to March 2020, we decided to not stop inspiring entrepreneurs. We were producing these emergency episodes to inform everyone about the latest in resources, critical information, government support. So we'll be there for a while through this tariff tiff and beyond, because conversations about entrepreneurship and innovation in mainstream spaces in Canadian media is a bit limited. So we want to boost that in the spirit of Canadian acceleration. And it is a critical time, broadly speaking, Mike, for Canadian business, if we zoom out a bit.
Most definitely. The hard part through all of this is we have a tendency to, I guess, be a little bit negative as we look at things. As we learned as we came out of the Great Recession in 2008-9, and we learned out of COVID, there's a lot of opportunity. So, status quo in our economy and status quo in the world actually is a limiter on opportunity. So I look at what's going on now politically. I look at what's going on the whole tariff discussion and opportunities. I think there's a lot out here that we need to focus on from a positive side. And it's really easy most days to do the old Chicken Little, the sky is falling side. And I think part of our objective in all of this is to maintain, some positivity amongst the Canadian entrepreneur, but as well to provide an outlet or an option, if you will, for varying opinions. And, one of the things I learned very early on in my professional career was that, the more opinions you can get, if you're listening carefully and you've got a good base of judgment, you can actually get a lot of information, good and bad, and then make something for it. So I just, my goal on all of this continues to be to support entrepreneurs, but hopefully at the end of the day, even if they get one nugget of wisdom out of it and they can put it into the hopper as they make decisions, that's really where we should continue to be pushing.
And Mike, I'd be lying if I said I wasn't nervous about the times. As a marketer, it's a really unstable time in marketing, and I've seen a lot of yeses for the new year go to maybes very quickly because of Trump and the tariff showdown and sort of the broader economic picture right now. I've asked you for advice over the years. What advice would you give any young entrepreneur, for instance, who feels that they're subject to sort of macro factors?
There's a number of things in play, Dan, and I look at this and I say if I go to what has traditionally been the the CPA training that I had, and that's a little bit more on the Chicken Little side, is not Chicken Little, sorry, that's a little more on the sky is falling side. in terms of what can go wrong, and I think that's part of the accountant is trying to make sure that we've got all our ducks in a row and defend it. The entrepreneur in me, and having spent 19 years running a practice, the entrepreneur in me looks at this and goes, you know what? There's a lot of opportunity out there, and you have to see your place. I mean, this radio show was born out of one of the worst financial periods that we had seen back in 2008. So, had we not taken an opportunity that presented itself and ran with it, we wouldn't be doing what we're doing today. So, I think you have to look at where opportunities lie. You have to think outside of the box, and you have to take an environment that ultimately may be somewhat scary and say, where can I find a place in there? And I think that's the hard part. I mean, the pandemic, I think we went through so much during the pandemic that everybody seems to be really happy with the status quo. But you and I both know that status quo is not growing forward. It's, status quo and in the long run is actually taking a step backwards. So for a young entrepreneur or somebody that's in any profession or in any business, look for thinking outside the box, look for something and then try and be positive and run with it. And as we've heard from many of our guests, ultimately at the end of the day, don't forget your focus at the end of the day.
Yeah, I think I'll be spending a lot of time in December getting leaner and meaner, and as you guys have advised me before, doing more of what you're really good at.
Yeah, and if not, don't worry, Dan, I'm always available for therapy.
Thanks. Oh, I'll call you. We also want to acknowledge BDO Canada, of course, for being our title sponsor for the show for the past two seasons. They took over from FL Fuller Landau. Their support, their expertise, their reach around the world has really brought the show to the next level. A lot of big brains in your Montreal office, including Ernie Furt, who was co-hosting for many episodes, the mensch and savant of the office, as well as countless other professionals. Thank you, and looking forward to working with you in the new year. I also want to acknowledge our end of the team at TNKR Media, Marjorie Valsin, our incredible executive producer and showrunner of the program, and Fernando Helso, our brilliant longtime technical director. And we want to stay in closer touch with some of the entrepreneurs we've spoken to over the years, of course, to get updates on their progress, to help inspire us. We have a recent Alum episode up on the podcast feed with Loofah Farms, Bad Monkey Popcorn, Man-Made Underwear. So do subscribe on your favorite podcast platform, anywhere pretty much. We'll be on YouTube in the new year. And do, if you can, give us 5 stars as well. And speaking of 5 stars, let's get to our 5-star guest on the show today. Brett Huneycutt is the co-founder and chief product officer of Wealthsimple. Now, after 10 years as a financial platform and app, Mike, they are now knocking on the door of the 10th spot to be potentially one of Canada's largest financial institutions. Brett is a Rhodes Scholar and a Master of Economics from Oxford. We've had a lot of CEOs on the show recently, so we figured why not have a product guy? It's a different type of founder, different type of entrepreneur. Brett and his co-founders had previously built and sold a family tree type of app to Ancestry.com. They stayed together to build Wealthsimple. They brought on Power Corp as their lead investor. That's the Montreal connection on the show today. Power recently upped its controlling stake in Wealthsimple, so they're at 3 million users, 5 billion in assets, and IPO rumors all swirling in the background. So, Mike, lots to take apart with Wealthsimple.
Yeah, very, very exciting story. Very interesting story as we continue to move away from traditional things in our lives, which include our traditional brokerages, our traditional banking. Certainly one of the first in that space, and one of the first. I think Tangerine might have been the first one to open accounts online and do some of the things that they're doing. But you can certainly see a moving forward. The time frame of all of this is one of the questions I think we're going to get to. And I look at when this was born. It's 10 years old. It came out of post the Great Recession. It came in a period of time when Wall Street and Bay Street in Canada were very questionable in terms of credibility and responsibility and accountability. So this is a whole new era. And the thing I think that it continues to be challenging for an organization like this is going to be, how do you change the demographic? How do you take a 60-year-old or a 70-year-old who's used to having one scenario and have them switch their banking and their investment portfolio and platform to an environment that is purely online with zero retail spaces? So it'll be a very interesting conversation, and I think the opportunities associated with what this means going forward in the fintech world, it just continues to open up. And like we said on many occasions, the Montreal Brain Trust is really something for us to be proud of.
Also on the show today, content marketing. What is it and why it's important for professionals and experts of all kinds? Wealthsimple actually runs their own magazine, and their TLDR newsletter and podcast has an audience in the millions. Very impressive. So perhaps we should ask them for some tips as we get more into podcasting, Mike. And let's get started and talk about the Trump tariff showdown. It's what's on everyone's minds. Still, the president-elect now making jokes about Canada becoming the 51st state to call attention to our trade imbalance. He's wielding that threat of a 25% tariff on goods going south of the border. The PM's visit to Mar-a-Lago a few days ago not having the desired effect. Mike, I'm getting the impression that we're being laughed at a little bit.
I think the trip down for Prime Minister Trudeau is, you can read into a lot of it. You can say, hey, there was a lot of positivity to it. He's the first of the G7 countries to find his way to Mar-a-Lago since the election. It means he's the first one on the docket. You can look at it and say, we had to follow exactly Trump's format, which was don't tell anybody you're coming. You can only bring so many people, and the only way the broadcast news found out about it was ultimately they found the Canadian jet flying through the skies heading their way down to Mar-a-Lago. So, the whole hush-hush scenario is just a complete and utter control movement, as it always is with Mr. Trump. And I don't think any of that's going to change. The reality is, I still think that Canada is essentially a pawn in the bigger picture here for international tariff and for border regulation and everything else. I mean, you're not going to look at this at the end of the day and say, if Mr. Trump, by the way, if you think that I'm going to tax Canada 25% and that's one of our friends, just imagine what I'm going to do to your country somewhere else. So it's playing fear factor. It's playing chess or checkers, I guess, depending on where how strong you think the actual strategy is. And it's disconcerting, but I think we're blowing it way out of proportion at this point. I don't see how they can become in the U.S. so insular that they're going to throw a 25% tariff on everything that we sell, including things that they need from us. If he does that, you're going to watch inflation in the States go through the roof, which is going to have a very, very negative effect on interest rate control and on prosperity and ultimately the stock market. So, there's a lot of things in play here that I think are part of a much bigger picture. And obviously, we're the poor cousins to the north when you think that, somebody can slap a 25% tariff on us. What are we going to do? Turn around and what? We're going to do the same thing to them. Again, it's trying to find the positivity and the negativity. Do I think there will be tariffs? Sure, 100%. Do I think it's going to be at 25% across the board? Definitely not. So I think this is part of a much bigger international plan that Trump, if you give him credit for thinking that far ahead, actually is looking at doing.
Okay, well, I hope you're right. I like the optimism, and I would say that there's so much nervousness right now that people are talking about whether or not Canada would head into a recession in the coming months. We'll get to some discouraging job numbers as well in a second, but the bluff, if it is a bluff, is certainly having a very real effect.
Oh, definitely. I mean, where there's smoke, there's fire. So, you can't say flat out that no, it won't happen. I think with most things, as we see with President-elect Trump, it's a beginning of a negotiating point. You always start on the far extreme, and you're gonna walk back till you get what you want. So, does he want 25% tariffs from Canada? Probably not. Does he want tougher border control? Does he want certain sanctions? Yeah. It's very possible. And he's going to come at you with 25 to settle somewhere else. So I do think it's a very traditional negotiating style. And it's why maybe you don't hear the panic in my voice as much as many other people. Having said all of that, there is no doubt that there will be change going forward. And I think as the U.S. economy continues to try and control, inward control of everything from, oil production to manufacturing, they will alienate and become a little more insular day after day. Having said that, if you go back 15, 20 years, I mean, the U.S. economy has traditionally been insular. It's only just gotten that much more obvious. And, if you go back to some of the moves, even with Obama, there were things that were going on that you could lead in this direction. So It's not completely foreign to us. And I think, the best we can do is try and find opportunity. So if I go back to the beginning of this conversation, Dan, I look at this and go, there are definitely going to be opportunities. And for those companies that want to be a little more efficient, streamline operations, and can start making moves just in case, now's the time to do it, even before it comes in. So if it doesn't come in at 25 and you build 25 in and it comes in at 10, you're that much further ahead on the game.
More good news. Canada's unemployment rate rose more than expected to 6.8% in November, an 8-year high, excluding the pandemic years, even as the economy added a net 50,000 plus jobs.
What I love, Dan, is, traditionally I've been told that I'm the realist slash pessimist, and we seem to have played role reversal today.
Apparently.
Yeah, so no, definitely not good news. And, part of this, I think, continues to be a what if scenario. So there's an anticipation. I also think that post COVID, and this is something we've seen in a lot of places, a lot of people have gotten really inward thinking on themselves. They're not doing the jobs the way they were before. The concentration and the desire to work as hard as they used to is no longer there, whether that's a byproduct of, PTSD from COVID, or whether it's, the new normal, as the term was, as we were coming through. There's a lot of people not pulling the weight. And ultimately, at the end of the day, traditionally business has taken periods of uncertainty to kind of check and balance their own environment. So yes, I don't like to see numbers like that. It sends in the wrong direction, because chances are it may be the wrong people being let go, or jobs being curtailed. But the reality is I think everything that is positive needs to find a way. We've been through inflation. We've been through a run. We need to stabilize again. And I think that's part what we're seeing now. And I wouldn't be surprised that a lot of this is a byproduct of the fear that's in the market right now. And we all know that a lot of companies like to use fear as an excuse to do what they need to do.
And a little more for the podcast audience now, Mike. You did read The Art of the Deal. So I think that is informing some of your opinion here. Obviously, is he bluffing? Presumably. I mean, presumably he's bluffing, but to what degree? And do you think we're going to be in a situation where some specific industries might face heavier tariffs, and more of that anger than other industries?
Yeah, so first like to correct. I read The Art of the Deal in 1989 when I was in university. So my philosophical approach to life may have changed, though. Having listened to Bob Woodward's The War recently, clearly I don't think Mr. Trump's has changed. Basically what I read from The Art of the Deal at that time was very similar to some of the conversations Woodward had with President-elect Trump. Look, it's a negotiating tactic. It's certainly part of it. I repeat, I do not think we're going to get out of this scot-free. There will be something. To answer your question, do I think certain industries and certain of course. I mean, you're going to find areas, especially when you're trying to create a certain control within your own economy, within your own borders. If somebody is, and he likes to use the word dumping, if we were to be considered to be dumping oil or softwood lumber, or whatever that case may be, those are those areas that end up getting hit because you're trying to control the price that's going through. The same token, you have to be able to balance that internally within your economy to ensure that, if you need softwood lumber and you put a 25% tariff on it, well, that's going to have an effect on the price of housing. It's going to have the effect on so many other things. So, the ecosystem is very fickle, and it's easy to throw anything out you want in a threat. It's another thing to find a way to make sure that that doesn't create backlash. And I think the last thing that President Trump needs is to see inflation at 7% in the coming year, and have interest rates skyrocket in order to combat that. To turn around and find that his drive on the economy and to push things forward, which has always been his point of, shall we say, point of conviction in running for president, is the economy, or as the old expression was, it's the economy, stupid. The reality is he has to take that into consideration, and you cannot be the insular component can only go so far.
We wanted to talk to a few tech innovators at the end of the year since they are really kind of breaking out, Mike, as future powerhouses of the Canadian economy. Our knowledge economy should be enormous and should be larger, I think. So we requested the heads of a company called Tenstorrent. Now, they're pretty new and very heavily funded. They're an AI chip maker, an alternative to NVIDIA that very few people have heard of, but they're valued at $2.6 billion dollars. Now, founded in Toronto, 2016, the founders are now based in Austin, Texas, and the company is technically headquartered in Delaware. So pretty classic, and frankly, a bit of a sad case of brain drain. But can you blame them? In the process, by the way, Mike, we're trying to book them on the show. Marjorie was calling them, and in the process, they did just pick up and move stakes. So that's probably why they couldn't do the show. They were busy moving all the boxes.
Yes, it's it's not a normal excuse for us that moving boxes is why they can't come on the show. There's a couple of things you said in there that just flashes me back to a very large part of what has been my business career over the years, and the whole Delaware Corporation. Well, we know why they're set up in Delaware, and there's been so much written on that whole discussion of using a Delaware corp. But I mean, let's look at this discussion. I mean, there are two things in play here. One is or maybe three things in play. One is the private equity market, and that ability to fund and growth has always been significantly stronger out of the U.S. The U.S. is looking for those opportunities. The second is, well, you know what? Right now they're paying $1.40 or $1.41 discount with their dollar, and it makes a huge difference. I mean, we've seen traditionally as the Canadian dollar has suffered, everything from real estate to business purchases skyrocket when the exchange rate is so favorable from an American market perspective. So there's number two. And you know what? Number three, our economy and our political situation and, dare I say, our language issues in Quebec are really not conducive to high capitalist mentality. Our changes in capital gains rates from 25% to close to 36% that came in from the Liberals back in June. A lot of these things are playing against capitalist mentality. And, if you're going to make a huge amount of money, you really got to look at where the money is, where it's easier to do business. Texas is much easier to do business than, say, Ontario or Quebec is. And I hate to say it as a Canadian, but we are going to continue this brain drain until such time as we can find a way to encourage entrepreneurs and startups and everything else so that we're playing on an equal basis on a tax level as well as access to cash level.
So that's kind of a hefty challenge, I think, for us economically and culturally. But what needs to happen at a political level, you think, specifically to make sure that we don't keep losing some very valuable companies to neighboring lower tax jurisdictions? Now, there's been talk of a global minimum tax rate, but obviously under the Trump administration, that level of international cooperation could probably just take that off the table for now.
Well, I mean, we're going back to the table for the U.S., Canada, Mexico trade deal for 2026. So we all know that anything between now and then is ultimately going to be, somebody trying to position for a conversation at that point. You cannot discourage entrepreneurism. You cannot take, I mean, I think part of the goal from the Liberals was to take some of the money out of the stock market on capital gains. I don't really have a problem with that. I mean, yeah, okay, it goes against my capitalist mentality, but you know what? At the end of the day, if you had, $1 million worth of shares and it's gone up, okay, so pay your share. But, how can you turn around and take, whether it's real estate or small business? And, I've tried to explain this to people for years. If you sell a business for $8 or $10 million and you've had family and you were supporting, I know it's a huge amount of money, but in the grand scheme of things, the cost of another $1 million in tax has its way of finding its way back into the marketplace. And we cannot continue to tax everybody at that same level from an entrepreneurial standpoint. And I think that this continues. Yes, we bumped the capital gains exemption up a little bit. We've made some changes, but I just don't think it's enough for big business. It really is earmarked at the small to medium business. And there's a big gap between small, medium, and huge public company. And I think we have to find a way to not discourage that, because that is ultimately where a lot of the growth and a lot of the, as you call it, the brain trust is going to go.
I hate to ask, but what do you think we'll be talking about in 2 weeks' time when we do our holiday show? What will the mood be like before Christmas?
I think we're going to continue to be on the pessimistic side. I don't think anything is lining up for it to be warm and fuzzy. Retail sales aren't, I think where everybody would like them. There's no doubt that the tariffs are going to weigh heavy. The political uncertainty with Trump coming in, well, basically, 40 days from now, 45 days from now. There's a whole bunch of things that are just not conducive to people being upbeat, unemployment rate. So I think we're going to continue in that negative tone. I think, it's a lot of it is also fed from the media. A lot of it is fed on the uncertainty. You can't sit back and watch any kind of newscast on where Trump is going with the cabinet appointments and everything else and go, what the heck is going on here? So I think we're going to continue to be in a statement of uncertainty. And that's the one thing I think that worries me the most. It's not necessarily the direction, but the uncertainty. We all know uncertainty is terrible for a market of any kind, whether that's a stock market or whether that is, cross-border trade or whatever the scenario is. So yeah, if you're, I'm trying to be as positive and upbeat going into 2025 as possible, but I don't think that is going to find its way into everybody's home in the next 2 weeks.
All right, so we'll see how things look in a couple of weeks. And on that holiday show, we'll have a tariff TIFF update, as well as more talk about the state of Canadian innovation heading into 2025. For now, let's explore the astonishing rise of Wealthsimple. For more analysis and thought leadership from the BDO team, visit bdo.ca. Brett Huneycutt is the CPO, Chief Product Officer, and co-founder of Wealthsimple. Welcome to the show, Brett.
Thanks so much for having me.
First question is always the easiest. What is Wealthsimple?
Well, we offer financial services to Canadians. So we got started by making it really easy to invest. You sign up, send us some money, and we invest in a diversified portfolio based on your risk tolerance and preferences. But over the last 10 years, we've expanded our product suite greatly. We're now Canada's largest brokerage in terms of number of users, increasingly becoming the most sophisticated and easiest to use brokerage. We've been getting into banking-like services as well. So we offer what we believe is Canada's most attractive high-interest checking account, which we call Cash. And we're working on a bunch of new products as well. So we are in the very early stages of offering a credit card. We're interested in mortgages. Basically, anytime a Canadian thinks of a financial service that they may need or want, but we want them to think of Wealthsimple.
So maybe just differentiate for our audience a little bit, Brett, the difference between the traditional brokerage firms as well as what we used to consider the discount brokerages. So TD Waterhouse, the Action Direct at RBC, those types of things.
Yeah. We started in 2014 really as a digital first company. And so the primary way that you use Wealthsimple services is through our website or our mobile applications. We don't have a branch network, so it's impossible to go into Wealthsimple to visit us, at least at the moment. That's something we may explore in the future. But primarily digital first offering. As a result, our desire is to offer financial services that are better value, more affordable, much easier to use, much more fast and frictionless. Our aim is really to make financial services that are much, much better than anything else that's available in the market.
So if I look at obviously you look at the website and most of the information for anybody who wants to have a look at what you're doing, I guess they can grab from the website. I look at it and I say, okay, so talk to me about safety, talk to me about security, talk to me about all those things that, Canadian investors look at, CDIC, all the rest of the stuff, just to let's get everybody situated and then we can get into a little more juicier stuff afterwards.
Yeah, totally. I mean, we invest a lot in safety and security, and in general, I think are trying to build trust-based relationships with our customers. And I think, safety and security is a big part of that. I'm really proud of actually, how we've been able to innovate in our product, I think, in this dimension in a few different ways. So one of the cool things, since we're not technically a bank, we're a brokerage, we actually rely on bank partners, for instance, to custody our funds for our cash accounts. And that allows us to offer, for instance, a market-leading CDIC insurance rate in the market. So instead of offering just $100,000 of your money protected, we will offer $1 million because we have 10 different bank partners and are able to spread your funds across those 10 different bank partners. So I think that's like one of the ways that we're using technology and our position in the market to offer an even more secure and safe product. Of course, I think the issue of developing trust is something that happens over many years and decades in the financial services industry. And we're about 10 years into our journey. And the thing that I find most promising is that when you talk to our customers and you sort of systematically measure how happy they are, you see that we have market leading rates of NPS in the market among all financial institutions in Canada, an NPS score above 60. You see that clients are deepening their relationships with us over time. And so, they start off with maybe one product, an RSP or a cash account, and then over time they add more products and they consolidate more of their wealth with us. And I think that's a testament to the trust that we're building with our customers.
I've spoken to a few millennials who use your app for banking, for investing, I suppose, and they like it because they feel that other apps in the market for the traditional banks are way behind, maybe 10, 15 years behind you folks. That ease of use, that user interface, can you talk about that and how that goes into the strength of the product you're offering?
Yeah, I think this is a multi-dimensional thing. Of course, there's actually the UI, like the design and the layout of the website and the app, which we aim to make, I think, very simple and straightforward and easy for anyone to understand. But I think something that we've learned over the years is that in addition to just the UI, it's actually the way that we integrate with the traditional financial services institution, that the traditional financial services system that really drives, I think, a lot of the simplicity and the ease of use. So, I think that our customers are most delighted when Wealthsimple just works. And it just works really fast and seamlessly, and faster and more seamlessly than the experience they may have with a traditional financial institution. So, this may seem mundane, but, when we launched 10 years ago, we were the first company in Canada to offer an entirely online account opening experience. And not only is it online, but it's an instant experience. So, if you want to get it started investing, you sign up for us. Within a few minutes, during the same sort of one session, you're able to sign up, get your account funded, get invested. And making that stuff work seamlessly, of course, it's where we spend most of our time, at least as a product development company and an engineering company. And so I think that's a really big piece of it as well.
So who's your target market? I can hear the audience of all different ages going, what am I going to do with that? Like, I'm not a millennial. I don't understand doing things online. I want bricks and mortar. Or I want one of the big banks in Canada. Are you targeting a lower, or are you finding that this is a really good conversion and a really switch from the bigger institutions across all age categories?
Well, we certainly have customers of all ages. You have to be 18 to open an account, so our youngest customers are 18. That's something that we'll be working to change over the months and years ahead.
Brett, I got to tell you, I would have to assume that, but my question was not targeted at the 18-year-olds.
No, fair enough. And we have, many older customers as well. I actually don't remember the data point on our oldest customer, but I would bet they're in their 90s, if not in their hundreds. So our median customer is 33, 34, 35. That said, we have a huge distribution of customers. We recently announced that we crossed $50 billion in assets. And of course, just the way the economy works, the way wealth accumulation works, most of assets in Canada are held by older customers older than 33. And so, looking at the data from the deposits this year, for instance, 40% of our deposits are coming from generations older than millennials. So Gen X, baby boomers. We believe that especially as we've made our products more sophisticated to offer more asset types, to offer more account types, that we are increasingly a great offer for older customers as well as younger customers.
Yeah, because I guess that's the kind of the dichotomy here is the older customers have the cash and are less likely, I guess, in many cases to use the online facility, whereas the younger ones, are definitely not wanting to walk into a bank and are going to use but may not have the wealth. And at some point in time, I guess you get the cross and the axes in order for this to start making. And I guess the big dent for you is to continue to get into that post-millennial group or to maintain the millennial group as they age and succeed.
Yeah. I mean, I think ultimately we want to, be the, we want to offer financial services to everyone in the market. And while, we started, I think, with very, very, very clearly in the millennial segment, we've had tremendous success with Gen Z. We're having a lot of success with Gen X and some baby boomers as well. And so I think this is actually one of our challenges as a company. I think as our product suite has become more sophisticated, we believe that we're a really excellent place for Canadians of all ages to get their financial services. And I think it's just a challenge that we have to, tell the market that about the products that we offer, make it easy for them to try us out. You certainly don't have to consolidate all of your financial relationship with us in the beginning. But if you want to try us out, see what you think. And in our experience, more often than not, once customers use us, they realize, wow, I really like this. And then they bring more business to us over time.
Brett, tell me a bit of the origin story. You're a tight-knit group and you've been working together for a very long time.
So I moved to San Francisco at the beginning of 2010 with one of my best friends from grade school. And we started a company called 1000 Memories in San Francisco. Amazing experience, amazing learning experience. We weren't nearly as successful as we've been with Wealthsimple, but we learned a lot. We went through a program called Y Combinator, which has trained many of the best startups in San Francisco over the last couple of decades, which was an incredible learning experience for us. But I think probably the best thing that happened in that experience was we hired this young Canadian kid, I think he was 22 at the time, as our VP of Business Development, Mike Katchen. And he, of course, is my co-founder at Wealthsimple and our CEO and the primary public face of the company. So he does this sort of thing much more often than I do. But, we worked on 1000 Memories for a couple of years. We were acquired by Ancestry.com. We made a little bit of money from the proceeds of that acquisition. And for many of us, myself included, I really didn't know how to. It was the first time that I had a little bit of money and I needed to figure out how to invest it. And Mike had a long interest in personal finance. And so he taught us basically which ETFs to buy on the Vanguard website. And I think we realized what a clunky and kludgy and complicated experience it was to do that, to get started investing. And I think that's what the genesis of us wanting to work in the space. We also, I think, just wanted to keep working together as a team. I think while we weren't as successful with our first company, we really liked working together. And I think that's a big part of the entrepreneurial journey, especially in the beginning, to really work with people that you trust and respect, and ideally who have complementary skills to you. Yeah, so that's a little bit of the story.
Yeah, it's not simple to start out in a business that is clearly controlled and run by the larger institutions and regulated to a certain degree for those larger institutions, and then trying to find your way and navigate your way through as a bunch of young guys taking a good chunk of money and being safe and secure. I noticed recently in the last couple of weeks you named Jeff Gowan as CFO. It was a veteran, I guess, of Stripe. And as you continue to build that team forward, you're continuing to build on that credibility and the trust factor. I mean, obviously, this is something, people hear anything that's outside in Canada, outside of, the big banks, they think Bernie Madoff and they think, all of these people. Like, how do you build that trust? How do you continue? Other than obviously, the protecting everything, but is this part of the marketing? Is this part of how you drive forward with the accountability to everybody?
I think building trust with our customers, has been one of the primary things that we've really tried to do over the last 10 years. And I think it's been a multi-pronged strategy. In the very early days, I think there were probably a couple of things that were most important for us. First, we established what has now been a very long strategic partnership with Power Financial and the Desmarais family in Montreal. And I think having that relationship created credibility and trust in the marketplace for us. It also gave us a lot of capital. And I think with that capital, this is something that I think is pretty unique to us versus, say, other fintechs globally. We actually invested a lot of the capital in our brand. We think of our brand as a person, and we wanted to create a likable, trustworthy, friendly brand / person in the market. And so I think we both spent a lot of money and I think hired a lot of the right creative talent to help us do that. So I think, maybe those are like two of the ways that we tried to establish credibility in the marketplace early. Of course, we have been, a highly regulated institution in Canada since the beginning, initially as a portfolio manager regulated by the various securities commissions in the country and now as a broker-dealer. I think the thing, though, that as we scale and as we now have become an institution that is, I think, very much trusted in the marketplace. We have 3 million customers. We manage over $50 billion in assets. We are now actually one of the top 10 largest financial institutions in the country on a number of different measures. The key thing for us, I think, to really continue to grow trust is to just deliver. Like we need to deliver an exceptional customer experience that exceeds the expectations of our customers. And I think when we're able to do that day in and day out, I think that creates a lot of goodwill and trust.
Yeah, it's interesting because we obviously advising a number of people with wealth for it's been 35 years now in my career. The move away from the bigger institutions is always a challenge for a lot of people, and you know it's a hard point. People don't understand the custodian. People don't understand so many elements of what goes on. So I guess my question was maybe a little bit directed at Wealthsimple and maybe more so directed at the market in terms of how do we get people to understand what it's like if they're not part of one of the big institutions. And I think that's an education process that's going to continue to move forward.
One of the ways we think about it too is also, just complicated sometimes. There's a lot of switching costs to try to like move your checking account from another institution to us. You have your direct deposit set up and you have all your bill payments set up. And so there's also just like a sort of a mechanical switching costs. And we're actually investing a lot in technology to make that process easier and more frictionless, just so it's
That's you used the word clunky before. That definitely is a clunky process. There's no doubt. So you guys have done great things with with the loyalty programs and customer retention. So I'm going to put you out there. What have you done wrong? What are some of the things you look at and go, man, we shouldn't have done that?
Oh, man.
Come on, you didn't think we were going to let you walk all the way through this just on a nice, simple feed.
Well, we make mistakes all the time. And, I think really making mistakes is part of the entrepreneurial journey. It's how you learn. I think for us, probably two of the most costly mistakes in terms of money and time spent were our international expansion in 2017 to the UK and to the US. I think the idea we had was right broadly. I think we saw opportunities in those markets. And I think if you look actually in the UK and the US, the FinTech markets have developed a ton over the last 5 to 10 years. And it's possible that we could have played a role in those markets over that time. But I think we launched with the wrong product. We launched with our initial robo-advice product, which I think ultimately is a really amazing, smart way for customers to invest for the long term. But I think we've also realized that it's not the thing that gets people really excited and like gets people excited to like join you and try you out. So it's not necessarily the first product that people adopt. It's often like the second or the third. And so I think our product strategy in terms of our international expansion was probably misguided. So I think that's an example that comes to mind as a mistake we made.
In fairness to you, I'm not sure if that's necessarily a mistake on Wealthsimple or more a byproduct of the lack of trust in the markets when you cross the border. I mean, the Canadian market certainly has a very different interpretation of itself and its safety measures in place. But Wall Street, has not been the fan of smaller investors, nor has it been the fan of and anybody coming from outside. UK is a little different because it has a lot of the control that Canada has. But winning trust back on Wall Street and everywhere in the US. I mean, you spent time in San Francisco. We see how that's gone. It's not an easy. I mean, how do you guys continue to try and build back reputations and trust in an environment that, in many cases, is just the institutions are making life difficult for everybody?
Are you talking about in the US and the UK in particular? Or?
Yeah, well, the US in particular, given that. But the problem is, we're the poor cousins to the north, right? Or according to Donald Trump's comment to Justin Trudeau the other day, the 51st state. So, when you look at that, that whatever happens in the US that feeds the insecurities across the border in Canada, we like to hang our hat on the fact that we are significantly more protected and controlled. But, there's still a trust factor and going into the U.S. I guess I was trying to let you off the hook a little bit there and say I don't think it was all Wealthsimple's fault, as opposed to it's also the industry and what goes on in Wall Street and the U.S. and the investment community.
Yeah, fair enough. I do think actually when it comes to financial services, Canada really punches above its weight on the global stage. I think as an example, TD Bank is America's most convenient bank. And has one of the largest branch footprints in the country. Scotiabank, of course, is all over Latin America. RBC and BMO have big presences in the U.S. as well. So in that sense, I think we are inspired by the incumbent financial institutions in Canada that have demonstrated that they can be successful on the global stage. And I think we would like to be one day as well. But that's not our focus now, and it's not our focus, at least for the next couple of years, where we are. We think we have a massive opportunity ahead of us in Canada, and we just want to keep making our products and our services better so that more and more Canadians decide to use us.
Brett Huneycutt joins us, co-founder and CPO of Wealthsimple. We'll have a few more questions on tech if you have a few more minutes for us, Brett, on the podcast. And in the meantime, real quick though, the term super app comes up a lot in FinTech. Is that where you think you're going? A centralized hub where you're managing all aspects of one's finances?
Yeah, I mean, the super app term, I think often comes from some of the apps in China and Asia that essentially become like the one-stop shop for the internet. I think that we certainly want to be the one-stop shop for financial services in Canada. And, we have put great effort into designing a beautiful, simple, easy-to-use experience on both the web and on mobile that really, truly integrate various financial services. And I think as we launch new products, I think we're increasingly excited about making them easier and easier to use in combination. And I think having one shared footprint makes that simpler. So, for example, one of the products we're working on right now is Margin, where customers are allowed to borrow against their assets that they have at Wealthsimple. I think we're most excited about this is using this as more of like a portfolio line of credit. So being able to offer Canadians secured credit at a much better rate of interest than they may be able to receive, for instance, on their credit card, and making that really simple and seamless to use and access and pay down in an automated way. So I think that's an example of an integrated product that we're excited about. We have been very careful as a company to try not to create silos between teams for various product lines. Like, what we really care about is offering the best possible service to the customer overall. And so I think it's not just about creating a seamless app experience, but I think it's also about creating a company that's really cares about the customer first and, the specific product line second.
In building this hub, or maybe one day a super app, integrating crypto, can you tell me about that and how that bumps up against other more traditional financial services? What kind of concerns and safeguards do you have in place with crypto?
I think crypto has proven to be something that some of our customers, but certainly not all of our customers, want. And I think probably the thing that we have, maybe the sort of like key theme for us with offering crypto and offering various other different asset types on our platform is selection. And so we really want to be able to offer the widest selection of assets, account types, hours in which you can trade or use our platform, web and mobile. The thing that we've realized is that the more choice that we offer to our customers, ultimately the more they choose us. And so I think that's the product theme that is really driving our decision making there. Crypto is of course risky, and we have worked with the regulators to become the first regulated crypto offering in the market. And one of the safeguards that we offer is, for instance, that we put everyone through a suitability test before they're allowed to trade crypto. And so we also have limits on the amount of crypto that you're allowed to trade. So we want to make sure that our customers are doing it in a safe, responsible way. I personally find the whole crypto market to be really fascinating. And, while I certainly wouldn't, personally speaking, while I certainly wouldn't want to have all of my wealth tied up in crypto, I am very excited to have a small percentage of it, as I'm bullish on the market overall.
Let's take a trip down memory lane. If my math is correct, you've been around for 10 years, so that goes back to 2014. You said the journey started 4 years before that in San Francisco. If my memory serves, that is post-subprime, post-financial meltdown, possibly one of the most significant periods, certainly in anybody who's alive generation, but since the Depression, in terms of lack of trust. What drove you to start a business coming out of that market? Did you see an opportunity? Did you have the foresight, or did you just say, you know what, guys, this can't last forever, and we know how to deal with this?
Well, I'm I think initially in 2010, when I moved to San Francisco with my buddy Rudy to start Thousand Memories, I think it was really motivated by just my personal circumstance. You know, I was in my late 20s at the time. I had been studying in my early 20s. I thought initially wanted to be a PhD in economics, but I found academia to be a bit too sort of lonely and solitary. And then after that, I joined McKinsey and Company, and I worked at McKinsey for a couple of years in both New York and Mexico City, working on financial services. And I found that I liked business more, but I didn't like being an advisor. I think, wanted to, work with my friends on something that I really cared about, where I had much more, I think, control and autonomy and power to create the things that I wanted to see exist in the world. And so I think it was really didn't really have very much to do with the macro cycle and much more about, where I was in my life personally. I do think it's really, in general, hard to time macro cycles when it comes to starting a business. I think in retrospect, we got lucky. I think actually right after a crash is an amazing time to start a business. Interest rates are low and, markets inevitably rebound. And so there was a very long bull market in tech generally, and finance, of course, over the last 15 years. And I think, there have been many, many different ways that we've been able to ride. But that said, I think now, I don't know, is just as good of a time, if not a better time, to start a new company. I think there's so many exciting new trends. Of course, I think AI is going to revolutionize how we work and how we interact with computers. And there's so much opportunity there. And so I think there's a real need for builders to continue to take the risk and take a chance and start working. Yeah.
One question on content marketing. It's what I do, and I really love that you guys have your own magazine. You have the Wealthsimple magazine. I think that's really smart. You have lots of tips, and also there's a piece with comments from the late Anthony Bourdain there. Just some really compelling stuff. Is that a big part of your brand, offering your thought leadership, so to speak, your knowledge for free? And tell us about the importance of that in building up the brand.
Yeah, I think we've done amazing work as a company with content, and generally our editorial team is incredibly talented. We actually met the leader of our editorial team, Devin Friedman, back in 2010. He came to cover Y Combinator, and he spent a few days with us and a few of the other companies in our batch. And my co-founder, Rudy, became really good friends with him. And that's what started the long sort of recruiting process over the next few years. And eventually we were able to attract him to join Wealthsimple, I think back in 2016 or 2017. He was a longtime writer and editor for GQ magazine, and I think has brought incredible, taste and to some of the stuff that we produce. I think probably the thing that's been most successful for us is our TLDR newsletter. It's a weekly newsletter that we publish on Mondays each week. It has 3 or 4 million readers, which is pretty awesome. So it's definitely been, I think, a great way to get our brand out into the marketplace. Certainly more to come with that. I think the team has some really cool stuff that they've been working on. They've been doing a podcast as well, which has had some success, and we're excited about. And there's a few other things coming down the pipe as well.
So the burning question is, I sat here when I was looking at this and I went TLDR, Wealthsimple Investments. I got none of the letters. So what does it stand for our audience?
Well, the TLDR is sort of like internet lingo. I think it probably emerged on Reddit originally 10 or 15 years ago, but it stands for too long, didn't read. So it's kind of like the internet way of saying executive summary. So our intention is to publish a newsletter that you can read in 5 minutes and be up to date on what's happening with money in the world.
Brett Huneycutt, we'll have your one piece of advice for inspiring entrepreneurs in a moment. Thanks for joining us. And don't forget, you can subscribe to the podcast on Apple, Spotify, or your favorite platform. For more analysis and thought leadership from the BDO team, visit bdo.ca. Time for our expert segment. And so, Mike, I am at your disposal for anything related to content marketing or PR.
So, Dan, we figured, we spend a lot of time talking about everybody else. I hear your voice a lot, but very rarely do you get to talk about yourself. So I figured today we'd spend a few minutes, discussing. When we first started working together, you were predominantly a PR firm. You made that shift to content marketing. Maybe just explain the difference between PR and content marketing before we go a little bit deeper, so we can make sure our audience is now up to speed where I am, because it did take me a while to figure out the difference.
Yeah, thanks for your interest. And they're interrelated for sure. So it's very hard to do content at a high level without PR guidance, or at least some sort of marketing consulting guidance to make sure you're on message and in sync with the marketing department. The easiest way to separate the two is that the content is the writing and the audio and the actual stuff. It's the actual material that goes on the web, whereas public relations is more the consulting end. So that's more the strategy, the coaching, media relations, and anything that is more human-to-human advisory. But PR is often run out of the CEO's office or out of the executive suite. It's not necessarily a traditional form of marketing. It is not advertising in the traditional sense. So we do content marketing and PR plans, which include a number of pieces of writing every month, every quarter. It could be blogs, newsletters are very common, social media posts, and of course podcasts like Inspiring Entrepreneurs. And we bundle that on a quarterly basis. And that, to me, is something that is more effective than just PR consulting. So in the early days, when I was a bit younger and perhaps less risk averse, we were called Provocateur. That was my first company, Provocateur Communications. And eventually I decided that because the internet was changing, a completely different approach was needed. So a lot less PR. PR is now more of a service. It's a service that's run in our content agency, but the content is what's taking the lead. So before it might have been 80% PR and 20% content, and now that's just flipped. It's mostly content with a little bit of PR on the side, and that content is important to showcase your mission and to increase the value of your own media properties. So your website, your blog, all of that has value. Don't just give all of your wisdom away by tossing it out on social media. Build your own media properties.
Question for you, Dan. What is Wealthsimple doing with regards to content marketing? I mean, this is your space, this is your knowledge area. So give us a little bit of a rundown in terms of what you think that they're doing really well these days.
Wealthsimple has some really interesting things going on content-wise. We spoke earlier on the podcast edition about their newsletter and podcast called TLDR, and that has subscribers in the millions. So that's a very impressive piece of content. They have their thought leaders sort of opining and putting their analysis out there, which is really great. The other thing I loved about Wealthsimple is they have something called Wealthsimple Magazine. They simply started a parallel website where they have informative blogs about their financial services and also some broader sort of thought leadership-y pieces. And interesting that Brett mentioned that they ended up recruiting a writer who was contributing to GQ to head their magazine. So you definitely get that kind of GQ magazine feel. And I'm going to use it as an example, frankly. I'm going to show my clients this is really wonderful. You know, you can actually start your own magazine or a small media outlet with even limited resources if you want to.
So what comes around goes around. I've listened to you for the last 4 years. Ask our guests the pivot that COVID brought on. What was the pivot that Dan and TNKR did, and why and how?
The pivot was not COVID, actually. We put the pedal to the metal during COVID as far as the pivot was concerned, because at a certain point, when you're in an emergency situation, when media is predominantly occupied with urgent healthcare news and crisis information, it's very hard for an entrepreneur or a professional or an expert to get their views out there, right? So the marketplace changed completely in terms of media space available for a lot of business owners. Coupled with that, the media environment, less opportunities for coverage, fewer journalists. All of that made the opportunities fewer and fewer over the years. That made us rely a little bit more on content marketing. Going back even a couple more years, there were major algorithm changes in social media, Facebook in particular. In the old days, you used to post on your platform, Facebook, Twitter, whatever, and your entire audience would always see that post in chronological order. No more, of course, with the personalized feeds, the For You feeds, the algorithm feeds. That sort of mixes in advertising content and all kinds of content and means that your followers, the people who clicked like and subscribe to follow you, aren't seeing as much of your stuff. And so that's a problem, and that requires an adaptation as well. So a lot of what we do is what you could call semi-private communications, newsletters, website blogs, specialty content for certain industries, stuff that is geared towards a small number of people, but who make very large and important decisions.
Dan, talk to us a little bit about the industries. Are there key industries that you're working with? Are there sectors that are more conducive to content marketing than others?
Absolutely. We chose to specialize in professional services firms. So we decided that not right away. It came after a few years. And I was almost certainly inspired by working with you and Josh in that sense, because we spoke to a lot of professionals, people who are experts in their field, accredited, very busy often. So they don't have a lot of time to do marketing. They don't have a lot of patience for traditional marketers necessarily. And they're more conducive to what we call thought leadership or news content, editorial content. They have perspectives and they have ways that they can contribute to public conversations in the same way that I have myself in political commentary. It doesn't have to be controversial or partisan or necessarily even aggressive. Professionals, doctors, lawyers, accountants, real estate people, especially here in Quebec, who want to see things built faster. Everyone can contribute. And so if you're an expert, we want to help you share your expertise.
Right. So Dan, I'm going to do what we probably should have done a little while ago. After 15 and a half years, I'm going to invite you back as our guest sometime in the new year to take what you've just spoken about for 5 minutes and actually kind of dumb it down for some of us, because there's a lot of information in there. Obviously curious as well as, how TNKR got started and why it got started. And let's just elaborate. So call this the official invite back as the guest into 2025.
Well, thank you very much. I appreciate the offer, and I'll have to bring my business partner Jessica as well, because she is also an inspiring entrepreneur and the backbone of TNKR. So thanks a lot and appreciate it.
Thanks so much, Dan.
And as we come to the end of our show, let's turn to our entrepreneur, the co-founder and CPO, Chief Product Officer of Wealthsimple, Brett Huneycutt, and ask him for his one piece of advice for inspiring entrepreneurs. Brett, what do you think?
I was thinking about this a little bit last night, and I think I have two pieces of advice, if that's okay. My first piece of advice for an entrepreneur just getting started is to really make stuff and put it out in the world. I think sometimes entrepreneurs get a little bit distracted by things that don't actually matter that much. They're like worried about like setting up their corporate entity or like networking with other entrepreneurs or maybe fundraising. And the key thing really, especially for a consumer company, but I think this even applies to a B2B company, is you want to create the simplest possible version of your product and get it in your get it in potential customers' hands as soon as possible, so that you can create a customer feedback loop and you can start talking to customers and start talking about how to make it better. This is something that, I think applies throughout the life cycle of a business, but is especially important in the earliest stage. So, really encourage people to just make something and start that customer feedback loop. The second piece of advice I'd give, which I think is especially important later after you have a product that customers want, after you have product market fit, is to set ambitious goals. There's this really interesting graph of the distribution of marathon finishing times. And it's not like a normal distribution. You see like this incredible clustering around like milestone times, like 2.5 hours, 3 hours, 3.5 hours, 4 hours. And to me, it's a testament of the power of goal setting. It's like if we set a goal as human beings, we oftentimes accomplish them. And it's really better to set much more ambitious goals than you think may even be possible, because you may not get all the way there, but you're going to get close. And I think that's a really, really thing that's been very helpful for us over the years as we've been able to grow.
Mike, just a fascinating story about a financial institution that just did not exist 10 years ago, and now it's among the top 10 in Canada. Really remarkable progress.
Very much so. And, it's the testament to the youth and the strength coming out of the younger entrepreneurial world. Certainly the FinTech is not always seen as for the faint of heart. So it's really great to see this move forward. The other thing that I find fascinating is in the last few weeks, a lot of the words of wisdom, the one piece have revolved around focus. And I think as we look at the market that has been a little more challenging and the concerns people are having around the world, I think this whole discussion of focus and moving forward. And Brad, I'm going to agree with you 110% that if you don't try and overreach, you'll never get there. I mean, that's all. And no matter what you're doing, that sense of ambition, that sense of drive, that sense of passion for what you're doing is visible in what you guys have built, but it's also visible in most of the successful entrepreneurs we've seen, in the past.
Thank you.
And Brett, thanks for joining us towards the end of the year, one of our last inspiring entrepreneurs of 2024, a very tumultuous 2024. So we appreciate your time and your wisdom today.
Thanks so much. This has been really fun. Thanks, Dan. Thanks, Mike.
Subscribe to the podcast, iHeartRadio, Spotify, Apple, anywhere you find your podcast. And we'll see you online in 2 weeks for a special holiday Movers and Shakers episode. Special thanks again to BDO Canada for supporting the show. From Mike Newton, I'm Dan Delmar signing off. We'll see you online for Inspiring Entrepreneurs Canada.
ThinkBait. TNKR Media. Good talk.